excited. Oh, I was just saying a little earlier how I'm always excited to connect with you because they say, Brenna, come and talk to my people. And you're like, sure, I'll come. I am here for it. So, guys, coming at you with another luxury short-term rental expert guest, meet and greet, kind of quick pop-up interview. We have Brenna now. Later on, we're going to have Ruben. He's going to jump on a little bit later, but wanted to say hello to you, Brenna, because here's the deal. We have the summit that's coming up July the 12th, right? We have 60 expert guests that are going to be sharing only 60 seconds worth of their most, I would say, actionable years of experience condensed down to 60 seconds. Initially, it felt like, oh, this is going to be cool and easy. Oh, my word, Brenna. It turned so many takes for everyone to like kind of, get laser focused and narrow down. These are the things you need to do. These are the things you need to know. These are the steps. These are the hacks. So there was no fluff. There was no long drawn out introductions. And so that's why you're here today, Brenna. I wanted you to get a chance to say hello to the people in the community. We are literally live on Facebook, Instagram, not Instagram, I wish, but Facebook, LinkedIn, Twitter, all the places. And so this is your opportunity really to say hello and to kind of, we can kind of chill and talk a little bit about mortgages and about how you got into it. And that's because we can't do that in a 60-second summit, right?
Right. So yeah, I mean, glad to be here. The 60-second video, honestly, like I had to like write it down so I could get it all in 60 seconds. So I can see why it'd be a challenge for people. But yeah, I was a professional singer before I got into the business, which sounds really odd. Never thought I'd ever be in mortgage. Bought my own primary residence. I built my own residence and I fell in love with the process, which sounds really weird. Got into mortgage that way. I'm here in the Smoky Mountains and just became my niche of short-term rentals and vacation home rentals and long-term rentals and things of that nature. And I just started to expand to different tourist areas, like the Panhandle, Galveston, Gulf Shores, things of that nature. And that just became my like thing. And so my business grew rapidly. And then I realized, before I was working for a different company and I realized I could offer better products, get these people closed faster, better terms, better rates if I opened up my own company. So of course I opened up the mortgage shop and here we are. So we specialize in short-term rentals, long-term rentals, and vacation home loans, and we help people build generational wealth.
Awesome. And way to solve problems for people who, you feel they would make a great candidate for, this type of home or this type of product, but your hands are tied. So instead of just sitting there and thinking, too bad, too sad, you went and opened up your own business. And I absolutely love that because when I met you initially, you were working for that company. And I remember distinctively you were doing jujitsu, trying to solve my problem, figuring out, okay, if we do it this way, then this, if we do, by the end of it, I was like, this woman is going to hate my guts, but you welcomed the challenge. You seem to like puzzles. You're like, okay, we can, move these levers. And that's what I love about working with you, Brenna, because you're not a cookie cutter, run of the mill box mortgage lender. You really understand what's out there, what's possible, and you really go all in. And the struggle that I have with some of those big box companies, the representative may be on day 2, right, of their job there, and that's who's helping me or not helping me.
You have your money in their hands.
Biggest purchases in my life. And he's reading off of a script and here are the rules. And it's like,
I didn't even realize people read off of a script until like somebody told me about 6 months ago. I was like, people actually, that's awful. Like, that's awful. But yeah, I mean, we even do like weekly classes for everybody because it isn't a one box fits all. Like everybody is unique. Somebody might have the same income as somebody else, but they're looking for a totally different type of product. They may be looking for a primary residence loan versus somebody wanting to do a DSCR, debt service coverage ratio loan. So it all depends on the borrower that I'm dealing with personally right then and there. and their long-term goals. It's not like just getting this deal done. It's like, what are your long-term goals? Because we want to make sure we have those in mind. So when we do this deal, it's going to set you up for later success and later wealth.
You're absolutely right. So we have a lot of W-2 individuals in our community who are, mid-income earners and high-income earners, but then our doctors, they sometimes have their own private practices too. So it puts a whole other layer of kind of complication, but at the same time, opportunity, right, within, their reach. So it's not necessarily W-2 and that's it. There could be, different opportunities with entrepreneurship. And so there's a product that you shared with us not too long ago, the bank statement loans. Could you talk to us a little bit about that? And there's some kind of...
Yes. So I am like, I should probably just become a CPA, even though I think it's really boring, but I look at so many tax returns that I feel like I could file somebody's tax returns pretty well, because I've worked with so many complicated tax returns, which is cool because it ends up showing, maybe they do make a lot of money. But we also do the bank statement loan now for self-employed borrowers, because I don't know if you've seen this yet with your clients, but some people become self-employed and start doing house hacking, right? And they start remodeling a house, renovating it, selling it, etc. Well, when you do that on a tax return, you could show quite a significant loss just because of all the cost of materials that you have to purchase. Or, if COVID, for example, is a big example, if your business deteriorated quite significantly during COVID or just showed a lower income, then underwriters don't like that. So, and bank statement loan is an alternative of us looking at your tax returns, and we can just look at the deposits that you make in your business bank account and things of that nature and use that as your income, as opposed to me doing an income analysis on your tax return. Now, I give the option for both up front to see, what they think. And then, if they don't know, because a lot of people don't know, what their tax returns are saying, if it looks like it is that, then we can do the bank statement loan. I try to find good quality products so I don't have to say no to somebody. And I can say, not that one, but let's do this.
I love it. I love it. And so, Brenna, sometimes you just kind of talk a little fast and gloss over some like major gems, and you're just moving on. I was like, wait, Brenna,
oh, sorry.
Let me get this gem. So you mentioned something about house hacking. That's something, and every time I speak with you, I learn something new. It's like, okay, let me let that breathe for a second. What were you saying about the house hacking? Because that's really interesting. And I know quite a few people may have like a guest house or something like that they're, or a duplex that they're living in. And that's a great way. I actually highly recommend that. I wish I did that when I graduated. I thought I was a big girl. I was like, oh, I'm going to get all the things. I should have stayed in the duplex and paid off my student loans. Okay, that's what I should have done, but another day. So tell me, what was it that you were mentioning about house hacking? Give me some clarification on that.
Yeah,
I know somebody will benefit from it.
There's different ways. So I was even talking to my, nephew, and he's about to turn 21. And I was like, well, when you want to start looking for your first house, let's look for a duplex, because you can live in one unit, and then I can show you and teach you how to be a landlord for the other unit for long-term rental, probably, or if it allows short-term rental, if the residential zoning allows for it. And that way they can learn from an early age and start to build wealth even then. They're not even paying their mortgage payment at that point. Yes. They're having somebody else pay their mortgage payment. So that can be that entrepreneurial like start to your tax return. And you're not going to show a lot of income just because you're offsetting that mortgage payment. So if you're only showing that, you're not going to show any income. So there's a bank statement loan for you. Now on the other end, house hacking, or like the BRRRR method, basically, so rehabbing a property, as I don't know if you, I'm sure you do know this, cost of materials right now are just insanely expensive. And so you can claim that on your tax return as a write-off, so you're not having to owe as much on the income that you did make off of that house per se. And obviously, again, I'm not a CPA, so I can't tell you how to file your tax return. So you do want to work with a real estate CPA that specializes in that kind of stuff. But when you do that, as you know, in layman's terms, if you claim a lot on your tax returns, you're going to show less income. So therefore, it might be easier for somebody in those two scenarios to do a bank statement loan, since they're self-employed in those types of fields, because we can just go off of the deposits that are coming in their account, as opposed to only like seeing negative income on their tax return because they've claimed all of the cost of materials, amortization, and all of that stuff off on their Schedule E.
That's awesome. That's awesome. So guys, again, this is Brenna Carls from the Mortgage Shop sharing with us some gems. She specializes in vacation rental loans, right? Loans for those who are purchasing their short-term rentals. And she is not a one size fits all, which I love because her clients come in all shapes and sizes. You got to look at the taxes, you got to look at the implications, high income earners, medium income earners, but some with W-2, some with thriving businesses, some with rental property investors. So she's got to figure out what's going to work for them based on what their goals are. So start to think strategically. Definitely leverage your tax accountant, your tax strategist to make sure that you are, planning out your year the way you need to plan out your year. So I absolutely love that you understand like the broad strokes of it so that you can definitely inform us as we're going through, hey, there are benefits to different things. Make sure you're speaking with your tax strategist. So guys, feel free to ask your questions. If you're here with us, let me take a look.
I do want to say while you're looking, I'm really proud because, as I get clients like 3 years ago, and now they're coming through 3 years, I'm seeing a lot of my clients now. A lot of them have recently quit their day jobs, their W-2 jobs, which is really cool. And like they have enough properties right now to be able to make more money than they were at their W-2 job. They have time for their family. So it's really cool to see the progress of the clients I did have 3 years ago coming through, with that.
Yeah. And so, Brenna, what you just said, it warms my heart. And you just have no idea how much short-term rentals has changed my life. And I know that there's so many investment strategies out there, but I don't hear a lot of our colleagues saying that for long-term rentals, like in 2 to 3 years, I was able to walk away, and not that, we're all walking away from our jobs. That's not the mandate here. I was one, they were like, you're going to quit your job. I was like, no, I'm a medical professional. I'm saving the world. Girl, I quit in February. I was like, bye.
You made it through COVID, like good. Oh,
I know, but having the option, that's what's powerful, right? Having the option to say no to the things that drain you and yes to the things that light you up. You should have seen me when I first graduated, right? I was like, yes, girl, please.
And in February, you're like,
right. Yeah. But it's so powerful. And so this is one of the most powerful tools that we have in our toolbox. So definitely look into luxury short-term rentals, look into short-term rentals in general. If you were thinking about it and you're stuck, you're afraid, you don't know, someone wrote me this morning and they said they don't even know how to list anything on Airbo. I'm like, me neither. Because, we're going to merge Airbnb and Airbo.
Oh, got it. Okay. I was like, I don't know what website that is. Okay.
I was like,
got it.
Correct. You're right. We don't know how to list on there. That's okay, guys. If you don't know how to list anything on Airbo, this summit is for you. Okay. It is for those who are just beginning, all the way to those who have properties, but they're looking at the algorithm right now. And they're like, you know what? I need to optimize. I need to, leverage the OTA, but I don't need to be over reliant on the OTA. We have marketing experts. We have direct booking sites builders, and that's going to impart on you how do we start to create those relationships with our guests so that they can become repeat guests, right? Because by the time you've served them and you've had a good experience with them and they've had a good experience with you, and they're yours to keep, so definitely there are small ways that you can start collecting that information, low-hanging fruit, to make sure that you are serving those guests. So these are the things that we look forward to sharing at the summit. So from newbie to 8 properties, 15 properties, but you want to optimize. We have a lot of experts. Did you see the lineup? I
did. Like you have some, I didn't even realize you had like Guesty or something, right? You had some large.
Not yet. Guesty, hey, Guesty, if you're listening, where are you?
I saw something. I saw Price you had Labs. Something. Price Labs, yes. I was like, that's
Price Labs, host.co,
yeah.
and host.co, I think that's a really, Annie, it's a really interesting company because what she does is she helps you streamline the upselling side of things, right? So remember, my approach is how do I own and operate the fewest number of properties that generates the highest profitability? So what does that mean? That means I'm not trying to buy 50 mad properties. Yes. Oh,
You have to read this book. I don't know if you have yet, but if you
I
haven't,
have. I've read it, I want to say 13 times.
okay. But that's good. Like this,
No
that's a
joke.
perfect good example for what you're saying right now. I do want to say, like, your group, if people don't know, your group is so cool because they can ask questions in your group, and like it's different. It's not like a dog eat dog world, right? It's cool because like everybody wants to help everybody because everybody has been there before. Everybody's had that crazy guess. Everybody's had that my algorithms aren't working, my pricing isn't working right. And then the other cool thing is I've hired clients that I had before that were clients, and now they're loan originators for me, and I've trained them up, and so they can help their clients, help them set up their Airbnbs and everything. And so it's cool because they're working with somebody that knows what they're doing on both sides of the spectrum.
That's so awesome. That is so awesome. I love that. I absolutely, absolutely love that. Oh my goodness. So thank you. Brenna, I am so appreciative of you. I cannot wait for our summit to start on July the 12th. It's just been such an amazing experience. I've had so much fun connecting with the people in this community. The information is just so good. It is so good, guys. And did you see the price of the ticket? $27. Seriously,
That's
if
cheap.
you
I don't have to charge more, but
right. Well, early bird ends on Friday, and it's going to be a whopping $47. How about that? It's so good, right? I'm creeping up. But overall, I just really wanted everyone to have the access because I get these emails, Brenna. I kid you not. It's like, I don't know where to start. I'm stuck. I'm overthinking. I say, I know you're overthinking. You're in the medical field. We always overthink things, right? So let's move forward. Where are you stuck? Okay, you don't know about lending. You don't know what's out there. Brenna's going to break down for you what options are out there. Okay, you don't know about design. Well, we have designers. We have a designer who only decorates 1,000 or less square foot spaces.
wow.
And then we have, like specialized, and we have designers that, talk about supply chain issues and how to navigate. Okay, if that's what's the information is there. And what I love about our summit is I'm bringing in high quality individuals that you can start to see what their take is on things in order to move forward. I need people to move forward.
Yeah.
I need
Don't
people
stay
to move
stagnant.
forward. Don't stay stagnant. So I know you got to go, Brenna, but I just want to ask you, I'm hearing a lot of discouraging comments in terms of interest rates, and there's this the sky is falling kind of mentality. Could you talk to us a little bit about that? What's your take?
Yeah, so interest rates have increased, right? And it's because the Fed has to curb inflation because they're literally not making enough paper money as they used to. And everybody and their mom started borrowing during COVID. So there's no more money to borrow, right? Like physical money. So the Fed did increase interest rates to curb that inflation. I personally believe they've already curbed that inflation or started to. They have one more rate hike in July. And I'm hoping it'll decrease by then. But if you just Google the average rate, guys, for the last 30 years, COVID rates aren't your normal rate because we were in a pandemic. So when something's happening pretty bad in the world, that's when your interest rates are going to be low. So you necessarily don't want them to be that low because something else is bad is happening in the world that affects worldwide, So the interest rates prior to COVID were a little bit lower than they are now. They were, probably 5.75 for an investment property. So they are a little increased now, so the Fed can curb inflation. But this is what I tell my clients. Everybody was purchasing during COVID and they looked like they were geniuses and they didn't have to do the work behind it because the interest rates are so low. Now, you can look like a genius still. You just have to do the work, and that's what we're here for. If you don't know how to run the numbers, we can show you. I'm sure you guys have calculation worksheets for if you want to look on your, cash on cash return, your CAPEX, all of that stuff. And we can say, does this make sense for you? Okay, if this one doesn't, let's look at this one. Here's an interest only option. If you are planning on refinancing it in the first 10 years, here's an interest only option. Does that help your cash flow? Does that show better numbers? And so it's just, we have to do more homework, I guess you'd say, before you jump into it to make sure that's the right one for you. My clients are still cash flowing. It just depends on their personal preference, what type of loan they want, what down payment, if they're taking that down payment and putting it towards, their cost up front, as opposed to putting it in through the timeline of what their cash on cash return is. So it is unique to everybody, but I promise you, there are good deals out there. And I don't know if you've noticed this, but purchase prices have started to lower. And I have a lot of contracts coming in where the sellers are doing seller credits now, which is cool because that didn't happen for the last 2 years. So guys, it's still a good market to purchase in. And I'll tell you this, when a recession hits, you know how they say you have to have money to make money? All these people are buying up these properties when the recession hits. And then the other people are like, dang, I wish I'd have bought, at that time. I was just scared. Yeah, the market's going to ebb and flow. It's never just going to die and stay down. So you have to just be smart, educated buyers. And that's what we're here to help you with. We're not just here to close the loan and we're done. We want to make sure that the numbers work for your specific situation.
Oh, I love that. I love that. And what you said, I thought was key. And I don't want, if you guys are multitasking, thank you so much for those who are joining, by the way. I'm looking here. I see B. Oh my goodness, B, I have seen you on several of these. I so appreciate you being here with us. Oh my gosh. So what you said that was key, Brenna, was the calculators. If you guys are multitasking, come back to me. What Brenna is telling you is the numbers have to work. It doesn't matter what the economy is doing, your numbers still have to work. And that's why she mentioned the cash flow calculators, the tools, because yeah, interest rates are higher. Yeah, they're lower, but still the numbers have to work, period, point blank, period. That hasn't changed. Okay. And so Brenna, is it true that we should, quote unquote, marry the house, but just date the interest rate? Don't get too.
Yeah, I love that saying. And I'm not going to post it because everybody and their mom's posting it now, but it's true because interest rates aren't forever.
Yeah.
You can refinance within the next 3 to 5 years. I promise you interest rates will level out or hit low again at some point within the next 3 to 5 years. Look at the history in the past 30 years. If you don't know what it is, just Google it. You can find anything on Google. You can even look in the specific area. For example, the Smoky Mountains, when we hit 2007-8 recession, at that point with all the new laws and stuff going into place for lending, it was just like a straight line. It didn't increase for house sales and income, but it didn't just drop out of the sky. So if the numbers work for you, numbers don't lie if you're calculating correctly. Numbers don't lie. So if they work for you, they work. They don't, let's look at a different avenue, maybe a lower purchase price for you, maybe a different area where you can get the same size house, but it's a lower purchase price. Let's look at things that don't have as heavy of an HOA fee. Or let's look at this product that if you put 20% down, you'll have a much lower interest rate. And you can put that towards your equity in the home, things of that nature. So there's always little golden nuggets of what you can do. It just depends on where you want to put your money, how you want to spend it, and what type of return you want.
Love, love, love it. So that's definitely a mic drop. I do have a couple of questions that came through real quick. So V said, I signed up for the summit. Yay. And Christian, thank you so much for dropping the link there. I have a Facebook user. There's someone here that is named Facebook user. We're using Restream. It's a software that requires anyone on Facebook to give us permission to see what your name is. So feel free to use that link that Christian dropped there, chat.restream.io, so that I can see who you are, because you say, I need assistance, I have funding. So yeah, and we're here to help. Oh my goodness, super excited. Let's see what else. Okay, so B says, I'm an entrepreneur with a job. I have a very small W-2 and most of my income is 1099. I have one property and my niche is eco-friendly and healthy vacation homes for families. I need funding to improve the home and also get more properties to expand my brand. I have a lot of equity in my current home. What do you suggest that I do to get more funding without a W-2? Ooh, I love that question, B. So thoughtful, right?
Yeah. So I heard you have 1099 as well. So it's not just a W-2 that we can look at. We can look at your 1099s. We can look at your rental income as well. And anybody can do that for full doc loans, which means they're looking at your debt to income ratios. First, I would ask, if your interest rate is good on those properties you have equity in for your primary, like your first mortgage on it. If you still have a mortgage on it and it's good, don't touch that mortgage because interest rates have increased a little bit. Just get a home equity line of credit, because even though I would love to do the refinance for you, the home equity line of credit is like a credit card and you can pull from it, pay it, pull from it. And a refinance is one and done. So you don't want to mess up that lower interest rate if you have that. Work with a bank that you have a relationship with already, because they can probably give you a discount on the interest rate as well. And try to get them to qualify you for a HELOC so you can pull cash out of the equity you already have put into your property. Don't take no for an answer because some banks will say no. Just keep going. I haven't fully announced it yet, but we are testing a HELOC product ourselves for our clients. Testing phases. So we're not like just opening the floodgates yet. We just want to make sure it's right for our clients and it works. So that's what I would do. So you can also reach out to me too if you want, if you have any further questions on that. You are more than welcome to refinance and pull the equity out. However, again, if you have a lower interest rate, I would recommend not doing that.
Oh, that's so good. So B, Brenna is definitely in our Facebook group. And if you do not, yep, she said, I will reach out. So for sure, check on her. Oh my gosh, that was so good. And I love the way you just kind of share that, Brenna. You're not just looking at it as a one-prong approach, right? These are different levers that you can pull. Some are a whole lot better than others, right? So, and then the don't take no for an answer is huge. Okay, she says, B says, my current interest rate is 4.5.
I would keep it. Don't touch it. Because I did a primary residence, just a normal purchase yesterday, and it was about a 5.125, and that's not even cash out. And cash out's going to add about a half to 0.625% to that interest rate.
There you go. I love it. Awesome. Okay, so I just sent you to that Facebook group. But Brenna, what's the best way for me to quickly get maybe a calendar link for you or your team so that she can reach out?
Yeah, I can do a calendar, or she can literally just call us because we're on the phone all day. So it depends. Okay. I can put it in the chat. I don't know. Can you see the chat?
I sure can.
Mm-hmm. Here's the number, and then I'll put the Calendly link too if they need to schedule out.
Awesome. Okay, I got the number. I'm copying that number for you, B, and I'm about to paste it. You are so welcome. She is so thankful. Thank you for being thankful. Uh-oh, what just happened? I hope everyone can still see me. I just got signed out of my account for some reason.
Oh gosh.
I know. I just got a pop-up that says you're signed out of your account. Okay. All right. So give me a thumbs up if you're seeing that. Okay. She says she can see it. Awesome. Okay. All right. Well, thank you. I so appreciate you being here, Brenna. You just have no idea how invaluable the information that you share in the space is. I tell all of the members of the community, go and see Brenna. She's not going to heavy sales pitch you. She's not trying to shove people into products that don't work for them. But the education that you provide in the space is what's, what I gravitate towards. I love the information that you've been sharing. So thank you. And I cannot wait to have you for the summit.
Yeah, I'm so excited for you guys. And let me know if y'all need anything or just random questions. And I'm here to help you guys as a short-term rental owner and long-term rental owner, but also as a mortgage company and a friend of Rachel's.
Awesome. Thank you. All right, guys. So stick around here for a little bit. I'm going to wrap it up here with Brenna, and then we're going to have an interview in just a few moments with Ruben. Ruben is next. And B saying how much she appreciates you as well. Oh, thank you, B. Oh, don't you just love these interactions with people in the community? All right, so let me